Hi there, welcome to Real Estate Rundown. I'm Lori LeCompte and I'm a real estate agent in Northwest Arkansas. So today I'd like to talk about loan pre-approval versus pre-qualification. If you're ready to make your dream of owning a home reality, you've probably already heard that you should consider getting pre-qualified or pre-approved for a mortgage. Basically, the difference between pre-qualification and pre-approval is the verification process lenders use to determine how much you qualify for. They may seem interchangeable, but they are not. So let's talk about the differences. What is a mortgage pre-qualification? Well, pre-qualification is a very early step in the home buying journey. When you pre-qualify for a loan, you get an estimate of what you might be able to borrow from a lender. The estimate is based on information that you've provided about your finances as well as a possible credit check. Now, it's not a deep dive into your financial situation and can oftentimes be based on self-reported information. Pre-qualification is also an opportunity to explore different mortgage loan options and work with your lender to identify the right fit for your needs and goals. A pre-qualification can also be useful for buyers who aren't serious about buying in the very near future, but they want to get an idea of what they might qualify for. Pre-approval. A pre-approval is as close as you can get to confirming your creditworthiness without having a purchase contract in place. The lender will pull what's called a hard inquiry on your credit report and verify each source of income that you list on the loan. These include pay stubs, W-2 statements, and in some cases, a 1099 and tax returns if you're self-employed. And by the way, a hard inquiry will only lower your score by a few points. Your score will also come back up after a few months as long as you continue to maintain your good financial habits. A pre-approval allows lenders to determine your debt-to-income ratio, which tells them exactly how much you can borrow. Along with that approval, you'll get an itemized estimate of interest rates, closing costs, monthly payments, and the maximum amount you're approved to buy. Getting pre-approved is a smart step to take when you are ready to put in an offer on a home. It shows sellers that you're a serious home buyer and that you can secure a mortgage, which makes it more likely that you'll complete your purchase of the home. While a pre-approval letter is evidence of the lender's confidence in your ability to handle a mortgage, you'll still contact your mortgage expert to have your pre-approval converted to a formal loan application once you have an accepted offer in on a home. Now, how long does pre-qualification or pre-approval take? Well, pre-qualifying is typically a pretty quick process, whereas a mortgage pre-approval can take several days to maybe 10 business days, as you'll need to submit financial documentation to the lender and complete an application. To expedite the process, have all of your documentation together, pay stubs, bank statements, W-2s, etc., so that you're not scrambling around to find everything. And that'll save you time. Which product's right for me, pre-qualification or pre-approval? If you're a first-time home buyer, you may find that getting pre-qualified is helpful, especially when you're trying to establish a home buying budget and want an idea of how much you may be able to borrow. When you're ready to make an offer on a house, a pre-approval tells the seller that you're an approved buyer who can afford to buy their home. So this gives you an edge over non-approved and pre-qualified buyers. Pre-approvals are good for about 90 days. If you haven't found a home in that time period, just contact your lender to have your pre-approval refreshed and keep on home shopping. Thanks for watching. See you again soon. Feel free to comment on real estate topics you'd like for me to cover down below. Knowledge is power.